What is going on, everybody? My name is Baloo and welcome to the jungle. This is the channel where we take a very simple approach to technical analysis. We look at the price in the context of volume using the Wyckoff method. If that is something that interests you, then why don't you hit the subscribe button? I do this every single day, except for the days that I don't. So, we are on a tear. We are getting close to the all-time high inside of Bitcoin. So I want to take a look at what's going on inside of Bitcoin. The price action is kind of timid at the moment. We're getting a lot of fluctuations inside of the altcoin space. We can't really make a decision to commit, and rightfully so. The all-time high is a very, very, very big deal, so we need to pay it the respect that it deserves. So we're going to take a look at the price of Bitcoin. I also want to see what is going on with XRP, because XRP, as I'm sure everybody knows, XRP is a very popular coin. It's been on a tear. It's been on an absolute tear. So we're going to dive into that and maybe talk about if it could continue to go a little bit further. So let's take a look at first Bitcoin. So here we are on the Bitcoin chart. I'm just going to drop down to the daily. Always zoom out and get your macro approach first. So this is all kind of old information. I'm just going to turn it off for now so we can keep it simple. We are in an uptrend. We are in an uptrend and we are eyeing the all-time high. So this is a very significant event. This is a very psychological barrier for many, many, many traders. You know, there's going to be a ton of people, whether you're long-term or short-term, there's going to be take profits that happen at 20K. Now, what that creates in terms of a response, a stop-loss trigger event, or some sort of other event that goes along with that is yet to be determined, but we are definitely seeing some pretty timid price action around this level. So let's just go ahead and zoom in right to this area right here, and let's just drop down to the 45-minute and see what we can see. So we have we're just, you know, the price action to the upside is really, really nice. I gotta say, it's very healthy. You know, it's just, oh, there's all my drawings. We're just continuing to the upside. It looks good. You know what? Let's just do it. Done. Drawings are done. That information I no longer need. So yeah, we have a nice healthy move to the upside. Nothing over dramatic. We're seeing a lot of bullish price action. We're seeing a lot of consolidation. We're seeing a lot of building along the way. Yeah, when you look at the daily, it's you know, it's just straight up, but you know, when you drop into the lower time frames, there's quite a lot of consolidation that's going on, and we can just keep getting positioned based on these trading ranges. So we have a bit of a move up here, not as much of a change of character as I would like to see. So you can see back here we had a nice move up and then a very simple change of character here. Those changes of character are where you can identify a trading range. So, you know, we came up and then we started going flat. That right there indicates the change of character, and we can analyze the trading range. So that is a little less obvious here. We're kind of going up. You could argue that we have a change of character right around here, but I'm just going to kind of analyze what's going on inside of this upsloping trading range here. So I'm just going to call this area here the buyer's climax. Buyer's climax is where your trading range begins. The only reason I'm doing that is just because it was the result of the previous consolidation before we started getting some nice consolidation after that. So it is upsloping. A lot of pattern traders are saying that this is very, very bearish. In Wyckoff, it's not bearish until it starts breaking down. So here on the buyer's climax, we'll just drag that across, trying to fit the range as nicely as we can. And we will bring that down so that things look good and things fit. And that's our trading range right there. So let's just go ahead and take a look at what is going on here. So if we break down this trading range a little bit further, let me just make some minor adjustments here. Bring that over here. Bring that over here. Yeah, that's more or less good. So let's break down what it is that we're seeing. So we have our buyer's climax. Okay, that's met with our automatic reaction. That kind of sets the range. So that's how I determined this trading range here. Or at least the width of the range. You determine the width of the range between the buyer's climax and the automatic rally, and then you stretch out the parallel channel to capture the majority of touches that are happening within the trading range. So this is kind of our trading range. Now, typically what you want to see as far as bullish price action is kind of these W patterns. You know, the price will come up, it'll fall off and consolidate, fall off and consolidate, fall off and consolidate. Those are very bullish structures, and what we're seeing here is we're seeing it come up, curl over, come up, curl over, come up, curl over. That's kind of, it's very timid is the word that I want to use. It's very timid, and it's because we're so freaking close to the all-time high. If I just say it's 20K, I mean, like, yeah, look at how freaking close we are. We are very, very, very close to the all-time high. If we were to just take off from here, we're looking at a 5% move to the upside to touch the all-time high. So there's a lot of people waiting to take profits at 20K. There's a lot of people that are going to short at 20K. There's a lot of factors that are going to come into play when we hit the 20K, if and when we hit the 20K mark during this consolidation. Now, shorting an uptrend that is as strong as what we have been dealing with inside of Bitcoin thus far is honestly like trying to put out a fire with a tank of gasoline. The trend is your friend until it ends. The trend is up, and this is a very strong uptrend. It is not up to you to decide the top. The market will decide the top. And if you try to short an uptrend, don't be surprised when you get liquidated, and don't be surprised when the price takes the frick off because of all those short squeezes that happen. They add liquidity and they have to buy at a high price, and it just jacks the price up further. So I am certainly not calling any sort of short. I am not taking any short positions against this trend. I don't care how close we are to the all-time high. We don't know what we don't know. And what we do know is that we're going up. All of your analysis needs to be to the bullish bias. I don't care what price it is. Plain and simple. Keep your analysis very, very simple. So, that being said, back to the kind of formations where we're creating these M's. These M's are kind of bearish. You know, you want to see the W's. The W's are much more bullish, but we're seeing M's, and it's just showing that the traders don't really know what to do. And fair enough. So let's just dive into what else we're seeing here. Okay, so we have our buyer's climax, automatic rally, and then we had our secondary test right here. That signifies phase A. So this is phase A. We're now inside of phase B. We had a little sign of weakness here. The volume doesn't look great, okay? You want to see an overall decline in volume, and it's pretty flat, and if anything, it's starting to increase. Now, you don't want to see an increase until you get an obvious spring. I don't think this is a spring. For those who are new to Wyckoff, a spring is when the price leaves the trading range and gets bought back in. It's a very bullish indicator. It's a very bullish buy signal. A lot of people call it a fake out. Yeah, it is. It is kind of a fake out, but what it more so is just a test of the available supply. And, if the supply is limited, the buyers can overcome that. The buyers can easily bring the price back into the trading range, and then that's just a confirmation that the supply is absorbed and that there are, in fact, more buyers than there are sellers, which is the entire basis of Wyckoff. A lot of these other techniques, breakout, pattern trading, breakout trading, moving average cross trading, those indicator trading, those are looking for demand signals, which is very different from what Wyckoff is doing, because Wyckoff is analyzing what's going on inside of the volume. We need to see the absorption of the supply. We need to confirm that there are less and less sellers. And it's the only method that I'm aware of that is focused on the selling side. We are focused on the selling because the demand is here. We're in a bull market, you know. We're flirting with the all-time high, so you know we have the bias that the demand is already present. We don't need to think about the buying. We don't need to think about the demand. We focus on the selling, and when there's no sellers, the demand is going to carry the price higher. So that's kind of how I'm approaching things right now. And to be honest, in the volume, I'm not entirely convinced that you know, it is looking like 20K might be it, obviously in the short term, but you know, the volume is kind of, it's not consistently dropping, which is what you want to see. Let me show you the last consolidation here. So this consolidation range right here, this was a reaccumulation, and it was more or less like that. But what you'll notice inside of the volume with this trading range is it's overall diminishing until we started marking up. So you can see the decline. Whereas this one, it's just not as it's not as clear. It's not as clear. I'm not saying that it's bearish. I'm not saying that it's increasing in the wrong places. I'm just saying that it's a harder read. And this happened down at 14K. Things became really hard to read down at 14K because 14K was the multi-year resistance point. And, you know, we kind of got the same characteristics in the price around that resistance. So the price is very shy. The price is very timid. And, you know, if we do get a push, it will probably, you know, realistically speaking, it would be very plausible to assume that that's going to be a short-term turning point. Again, all of your analysis needs to be bullish. It needs to be going to the upside until you can determine that the trend has actually changed. And for those who are wondering, when does the trend change? It happens at the transition from high to low to lower high to lower low. So as we're climbing, we have higher highs and higher lows. And at the transition point, we transition from lower highs and lower lows. That's where the trend change happens. I recommend that you pay attention to those trend changes on the daily or at a minimum on the 4-hour chart. You don't want to pay attention to what's going on anything lower than that. It looks like we're kind of breaking down here at the moment, but you know, we've been playing this dance for days now. So yeah, Bitcoin, it doesn't look terrible. It doesn't look, you know, exceptionally bullish, and it's to be expected because we're so close to the all-time high. So that was enough rambling about Bitcoin. Let's go into XRP, the freaking beast that's dumping right now. This is probably a spring. I wouldn't be surprised, like, if we do get bullish continuation in Bitcoin, I wouldn't be surprised if this little event that we're seeing here at the time of recording this video does get bought back up. So I'm going to draw a trading range on XRP. XRP's been on a freaking tear. I mean, that's not news. That is not news at all. But if we go to where it really started heating up, we got 150% in 1, 2, 3, 4 days. 4 days, 150%. You happy? Is that good enough? Let's see if we can keep going a little bit further. So I'm jumping down to the 45-minute. I want to take a look at this consolidation. This consolidation looks really, really nice. This looks very typical of reaccumulation. You know, I may even jump in this while I'm recording. We'll see how this spring pans out. So going to the buyer's climax, I'm just going to drag a range across, and I'm going to drag that back down to this wick right here, just this wick. Okay, so it's very, very plausible that this does end up being a spring. So again, the spring is when we fall out of the range. You know, people call it a fake out. People, you know, all the traders are freaking out because they've drawn a symmetrical triangle on this. You know, they've got their symmetrical triangle in place. They're waiting for the breakout on the symmetrical triangle. And it looks as though it's breaking down on the symmetrical triangle. It's, you know, pattern trading, there's a reason I don't do it anymore. And it's because there are so many fake outs inside of crypto that just end up reversing. You know, this in the pattern traders world is called, you know, if it gets bought back in and goes higher, that's called a fake out. How are you supposed to trade these things? You need to focus on the ranges. The ranges will tell you everything. And when it pokes out at the top, you're analyzing the strength. And when it pokes out at the bottom, you're analyzing the weakness. The trading range is far superior than pattern trading because it's, you know, there's no reason. There's no rhyme or reason. We're trying to analyze strength. And that strength comes from the buyers and the sellers. So price action, volume, these two things together, they work together to tell you strength. You need to see the context of the price, or you need to see the formation of the price in the context of the volume. This consolidation range is coiling. It's getting tighter. It looks as though it's an accumulation. We have our and from the point of the buyer's climax, beautiful steady decline in volume up until what is occurring right now, which is the spring. So we have a volume increase right at the spring. This is good. Now, what we need to see happen for this to be a buy signal for me, because right now we're just breaking down, and it's probably, you know, a little bit to do with what's going on with Bitcoin too. Bitcoin's breaking down a bit. So, you know, Bitcoin has some room to break down before it gets to the bottom of the range and bounces, if it does indeed bounce. Now, if we got that, what we would be looking for inside of XRP is something that looks a little bit like this. Come down and get bought back up and test on the bottom of the range. Now this test, we're going to see increasing volume up until the peak of the test, and then we're going to see the volume just peter right off. If we see that kind of signature where the volume falls off and we have a successful test inside of the range, that's a buy signal. And I would be entering a position on XRP here, making sure that my stop loss was below this wick at the automatic reaction, or the shakeout here. If the price goes below the shakeout, your bullish idea is no longer bullish, so you got to get out of the trade and reanalyze. It's okay to take stop losses. Managing risk is really important, but you know, that's basically what I am seeing inside of XRP. Just a quick update on XRP. If you guys enjoyed the content, please leave it a like. And if there are any, don't forget to subscribe. And if there's any coins that you would like me to take a look at, leave them in the comments section down below. And until next time, please trade safe. It's a jungle out there. Peace.